Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Volatility returns. So that rotation in stocks I talked about in the last episode of Investor's Edge has continued to cause gyrations in stocks. The high-flying tech-heavy NASDAQ stock index is down roughly 8% in the past 2 weeks, while formerly beaten-down small-cap stocks have rallied nearly 10% over the same time frame. This past Wednesday, the S&P 500 index fell more than 2.5%, and the NASDAQ more than 3.5% in what was their worst day since late 2022. So why has volatility returned? Well, for one, and this is something I've talked about many times on this program, the stock market had become so complacent that many investors thought their darling Magnificent Seven megacap stocks could do nothing but go straight up. And that's usually the time the market likes to throw investors a curveball. There have also been some fundamental reasons for the shift. Economic data have been showing signs of a modest slowdown of late, and then there was the Alphabet, formerly known as Google, earnings report, which showed some signs of weakness in ad spending and a lackluster forecast for the rest of this year. Add it all up and you have a recipe for a modest market correction. We'll have to keep an eye on things to see if it might develop into something more serious going forward. For this week's featured insight, avoid the crowd. I've talked about the dangers of investing with the crowd before, but I think it bears repeating, especially since it's currently playing out in real time. The crowded trades become the most dangerous ones when the story changes. And that may currently be happening right now with all the large tech companies that investors have been feasting on for a while now. It's not that they're not great companies, they just became too expensive because too many investors completely ignored the price they were paying for these stocks. The reverse of this advice can also be true, which is look for investment opportunities that the crowd is ignoring. Things that are being ignored by other investors tend to be cheap. No one cared much for small company stocks for the past few years, and all of a sudden, they become the best place to be invested. So what are other areas that investors have ignored? Well, there's the other 493 stocks that aren't in the so-called Magnificent Seven as part of the S&P 500 index. International stocks, and commodities just are a few of these ideas. Looking ahead, August, a tricky month for stocks. So believe it or not, August was actually the best month, on average of course, for the stock market until 1986. Since 1986, it has been the worst month, again on average for stocks, averaging a loss of 0.8%. Last year, that is August of 2023, the S&P 500 fell 1.6%. So how did August go from first to worst? Well, I don't actually know, but perhaps it's simply that the market can never become too predictable. And once investors realize that the market does well in August, before 1986 of course, the market changed based on investors' desire to capitalize on that knowledge. Now, it's actually possible the market is selling off right now in anticipation of the fact that August has become a very dangerous month to own stocks. So maybe the market will confuse investors yet again by rallying next month. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.